Hi friends, welcome back. So question for you. Are we in an AI bubble? And in fact, if you've been following the stock market, you'll know that AI has been the sort of leading storyline this past year. It's been driving all the momentum. And in fact, there's a really funny headline I want to show you. Check this out. Someone is very, very bullish on NVIDIA. You can see here, YOLO crowd bets NVIDIA could more than double, get that, double by Friday. So if you're that trader, please let me know. I'd love to hear about it. But essentially, I hate to break it to you. I don't think NVIDIA is going to double in price by Friday, but somebody does. And this is sort of the world that we live in where people are treating AI slash the stock market like a casino. Moreover, why would you bet that much? Well, NVIDIA was going to, announce their new chips, and I guess they were thinking that these new chips are going to be awesome, and maybe they're going to drive Elon Musk flying cars and Elon Musk robots and all that kind of stuff. And I guess if you believe it, right, and you get enough people to believe along with it, you can make money. I want to be honest with you. If you can convince enough people in the hype, you can make money. However, this goes back to the question is, are we in a bubble? Because ultimately, there's only so many people that you can fool, right? You can fool some of the people some of the time, but can you fool everybody all of the time? Now, to further answer the question whether or not we're in a bubble, we're going to ask our buddy Meet Kevin and see what he has to say about it. So first, let's have a listen to this.
Was my real estate startup a scam? That's a question that people have, and today we have the answer.
Okay, guys, we have the answer according to Meet Kevin. And I have to put these videos out there because you never know if Meet Kevin videos suddenly disappear due to AI. This is actually another video by Meet Kevin talking about AI and his real estate company. I want you to have to listen to what he has to say about it.
Meet Kevin here. Many of you have been so interested in my new startup, House Hack, and the biggest question we've been getting is, Kevin, what's this AI you're talking about? Everybody loves to throw around the phrase artificial intelligence to try to pump up valuations. In fact, Kevin, don't you do that all the time when you're reading those investor presentations and you're like, oh yeah, AI, everybody's got it. Yeah, I am. And so I want to show.
So how do you know if you're in a bubble? If suddenly people like Meet Kevin are talking about AI, I can tell you it's a bubble. And moreover, it's actually really funny. If you look at this video here in the picture, though, look at his jacket. He's wearing the same jacket as, pretty similar. Not exactly the same, but pretty similar to the one that Jensen Huang is wearing as well of NVIDIA. So I don't think that is by mistake. Now, if you ask fund managers, this is actually a funny question. This is according to a Bank of America survey. They asked 226 fund managers, are we in an AI bubble? And this is the 572 billion in assets these people manage. And the answer was 40% of them said we are in a bubble. 45% said we're not. And I guess that means 5% say not sure. But it's kind of a 50-50 there. I mean, well, 40-45, but flip a coin kind of thing. But this is the world that we've been living in. And the crazy thing about it is, as long as people believe in the hype, it'll keep going up. So markets today, we're actually up today. The Dow is up 0.83%. NASDAQ was up 0.39%, and the S&P was up 0.56% today. You can see some of the big movers today. Actually, a lot of the big players are up. So Microsoft's up, Apple's up, NVIDIA's up a bit. AMD took a bit of a hit. And actually, you know what? Let's take a look at this too as well. I have some of the stocks I was tracking today. So these are sort of the movers. Actually, interesting enough, Nordstrom was moving up. I know it's not AI, but they're thinking about going private, which is actually quite interesting. And actually, I can pull that up for you guys here as we're talking about it here. Where's that Nordstrom thing? Yeah, where is it? I have it right here. And I do this live. Yeah, there we go. Just let you know, I do this live. So you can see here, Nordstrom shares up 10%. Yeah, retailers trying to go private. And the reason why you would do something like that, and the reason why I go over these examples is I kind of want you to get a sense of what's going on in the market and how to understand it. A company would go private if they feel like in a Nordstrom situation, I guess their sales are slumping and maybe they need to make lots of changes, these kind of things. And it maybe be easier if they have full control of their company. So I guess the family still owns, I think I read it was 30%. There is a Nordstrom family, and I guess they're probably looking to buy it back, and they'll probably team up with some private equity companies in order to do that, because not everyone necessarily has all the cash in order to buy it back. Now, why would the shares go up? Because essentially, oftentimes you'll get it at a premium, meaning that if you're holding the stock now, the stock will go up, and then they'll just say, I'll buy it for X amount. This happened with Twitter, and if I remember correctly, wasn't it you guys can correct me if I was wrong, was it 40 or 50, was it $52, was it $52 that he said he was going to buy it for? There was a joke. It was like 520, wasn't there, something like that? I can't remember, but the point being is that in that situation with the Twitter thing, I think Elon, or was it 420? It must have been like $42 or something. That Elon Musk actually stated the price. So Nordstrom's, if they do indeed go private, and this is how like the rumor mill stuff works. We don't know for sure if they are. It's just that rumors came out, and it's like, oh, I better buy that stock because that's like instant money. But this sort of is emblematic of how our casinos are our stock market is a bit like a casino. I was gonna say our casinos are like a stock market, but our stock market is like a casino essentially. Other things that were moving, I just wanted to point out. Fisker, it was crashing again today. Are they going bankrupt or getting bought out? Who knows? AMD was also a loser today. I think it had to do with the NVIDIA just pulling further ahead. That's how I would probably read that. New York Community Bank is down again. Tesla's down. And then Bitcoin actually is trading at 63,000. That's an interesting one. There's something I saw too regarding the Bitcoin thing is there was one of these ETFs. Yeah, this is Grayscale's one. So I guess they lost like $642 million. I guess people are it says outflows here. So this is an interesting one because there's been a lot of hype into Bitcoin. I think I want to say it hit like 70 or 71,000. It was like the highest it's ever been. And it's kind of been tanking ever since. But the Bitcoin bulls will say, well, it's normal. Bitcoin is really, really volatile. The big thing I'm watching with this is what's going to happen with the halving event. And I think that's like a couple weeks from now. It's going to be in April, I know. And we will see what happens with Bitcoin. I'm not into this stuff myself. I think it's too risky. Speaking of which, actually, this is also related to super micro stock. So this was, what's the ticker? It's like I don't track this one that often, but I do see it. I mean, it was like a really big winner this year. So this is, SMCI down about 9% today. And it's been a real, if you're in the stuff and this is, these kind of stocks, was it the year to date, 220% year performance, 800%. It's been one of those crazy movers. I think it's been riding the Bitcoin crypto wave. But I believe they're thinking about selling an additional 2 million shares. So like basically an offering. That's what it says here. Supermicro falls on plans to sell 2 million shares. So be careful with these kind of companies. These sketchy companies, their stock price goes up. It's getting pumped for any number of reasons. Who knows? Maybe they convince some trading group. The same way that, it must have been some sort of trading group or something that's buying all of those, call options that thinks NVIDIA is going to double. It's that kind of thing. And just people follow the hype and you can make money. But you got to know when to get out. And now would be the time when they're saying, hey, we're going to be issuing more shares. Basically, they're diluting you. If you know what that means, it's basically, let's say you got a bunch of shares out there. I don't know what their float is exactly. But they're issuing, they can just print out a bunch of more. And it makes yours worth a smaller portion of the company. So they are diluting you. Moreover, this is actually another thing that's worth mentioning. Are we in a hype or not? I saw this. This is interesting, talking about AI. It says SEC fires AI washing warning shot. So what's going on is, let me show you these couple companies here. And actually, I'll start with this. So this is actually Meet Kevin. And the reason I'm talking about Kevin is because Meet Kevin's not alone in doing the AI hype stuff. This is his webpage. And he's even got like this whole, class, I guess. He's going to be featuring AI so you can get stuff done faster, right? Okay, so a lot of people... Yeah, you get it. But I would say he's not alone. So this is more obviously scammy stuff, right? More obvious. What's interesting though is that not everything is necessarily so obvious because like, look at this website. It's designed really, really well. It says here, this is called Delphia. It takes, and they crossed out money. It takes data to make money. And then they say what people buy, say, and do moves the markets. Consumer data is Wall Street's investment edge. We use spending data to find patterns so we can invest better. And they're saying here we hired a hedge fund team to get your data working for you. And look at all this money I'm going to make. Although, to be fair, though, this is kind of questionable when you see this stuff. Delphia member transactions, just when you, when you kind of see like this hype stuff that you're going to be so rich, etc. Here's another one. This is called Global Predictions. And the top of the page, they say AI plus finance, full stack solution for investing the insights and financial advice built on top of our proprietary economic insights engine. And they have all this stuff about, you're going to be rich with AI, knowledge graph, recommendation engine, forecasting, etc. Right? You get the idea. The reason why I'm bringing this one up, though, is that I just saw this. The SEC is actually going after these people. This is on March 18th, 2024. Let me read it to you. You got to hear it. This is from the government. The Securities and Exchange Commission today announced settled charges against two investment advisors. These are the ones I just showed you. Delphia and Global Predictions for making false and misleading statements about the purported use of artificial intelligence, right? AI. Firms agreed to settle SEC charges and pay $400,000 in total civil penalties. So this is what I mentioned to you guys. When people like, say, Meet Kevin promises you that AI is going to make you rich and that he's using it in all his companies, don't necessarily make that take that as complete fact because people do lie about this stuff or misrepresent or mislead. The exact language would be making false and misleading statements. This is again coming from the SEC. It says, and they're going after Delphia and Global Predictions. It says, we find that Delphia and Global Predictions marketed to their clients and prospective clients that they were using AI in certain ways when in fact they were not. We've seen time and again that when new technologies come along, right, AI, crypto, whatever, you guys understand this stuff, they can create buzz from investors, right? Buzz from investors as well as false claims by those purporting to use those new technologies. Investment advisors should not mislead the public by saying they are using an AI model when they are not. Such AI washing hurts investors. So please be careful out there, guys. I mean, this is going to be a long-running thing. This kind of stuff won't go away in terms of, whenever the hot buzzword or buzz product out there and everyone says they're claiming that they're using it, don't necessarily take that as fact. So do be careful out there. And, like I mentioned before, when you see like people like this saying, oh, I'm an AI expert and my company's using it, we're in a bubble. There's no way to put it. That's all I have to say about that. More of it going around the markets too. I want to go over this. This is a real estate story, which I think is really interesting. And we'll go through it. And this will, for those of you who are veterans of this stuff, you'll kind of hear language from the great financial crisis. So we'll go through it for yourself. It says here, real estate pain is showing up in an obscure investment product. We're talking commercial real estate. Essentially, there's just money's not there, right? And I guess these are delinquencies, so people aren't making their payments, and that's been going up. So the blue line is the 60 days delinquent or 60 day plus delinquent, and then the black line or the black bar here is the 30-day delinquent. Now let me read this to you guys, and you'll see why I mentioned the great financial crisis. It says here, an obscure investment product used to finance risky real estate projects, right there, risky real estate projects, is facing unprecedented stress as borrowers struggle to repay loans to commercial property ventures, right? People don't have the money to pay back what they owe. Known as commercial real estate collateralized loan obligations, or you could call it CRE/CLO. So that's commercial real estate collateralized loan obligations. So we'll use the short one from here on out, but just so you know what it is. And then listen to this. They bundle debt, right? Talking about bundling up stuff. Bundle debt that would usually be seen as too speculative for conventional mortgage-backed securities into bonds of varying risk and return. So be careful. This is happening out there. Moreover, this is a quote here coming from a money manager. It says here, the CRE/CLO market is the first shoe to drop in terms of defaults in the CRE debt markets. The loans inside the CRE and CLOs tend to be for transitional properties, right? So the borrowers are counting on reselling them before the loan matures. So it's just borrow from Peter to pay Paul kind of stuff, right? Or borrow from Mary to pay Sally, right? Or we can be, gender inclusive, or I should say sex inclusive, or borrow from Mary to pay Paul, or borrow from Paul to pay Mary, right? That kind of stuff. But the money's cycling around, and musical chairs, and eventually the music does stop, which I think we're talking about bubbles here is why. But today, many borrowers can't sell properties for anywhere near where they bought them for, right? So a lot of these people are underwater. Moreover, when you read more of the stuff, it's the same kind of thing that we've heard in the great financial crisis here. It says here, the basic concept is the same. Non-bank lenders create separate entities to hold tens or hundreds of millions of dollars of commercial real estate loans. And investors buy slices of the vehicles in form of bonds, right? And it's funny because the Kevin used to talk about slices about his company, if you guys have been following this thing. And I mention it because he's on YouTube also, and too, I try to keep an eye on this stuff because, there's so many things out there going on, and I try to warn people about this stuff, and this is why we pay attention to news and pay attention to stuff so you can protect yourself out there. I don't get caught up with these scammy stuff. In exchange, they get a share of the income thrown off by the underlying loans. Cash flows follow a so-called waterfall structure, and this is something that happens with this stuff as well. It's like who gets paid first, basically, wherein the most senior bonds get paid first, while the riskiest slice, known as the equity, gets paid last. Any losses in CRE/CL loans fall on holders of the most subordinated portion. So do be careful out there, guys. I just want to go over this stuff. with you that there's meltdowns going on in commercial real estate, and looks like scams are rife in AI, and also too, I believe we're in a bubble. That's just I'm in the, I guess, 40% of the fund manager thing, right? Where the other 45% of people think we're not in a bubble, but I tend to be towards more bubble. Other things going on in the news today is Bank of Japan actually raised rates a bit. I wouldn't be surprised if they raised a little bit more. They're facing a lot of troubles over there in Japan. And I'm in Korea, if you guys don't know, but basically they got population issue where the population is not growing and the economy is not growing. And I mentioned Korea because we're now a competitor to Japan, same with China. So it's in a different environment than, say, when they were in the 80s, when they were the leading country in this region. But now it's a pretty competitive area. Is Japan going to go bankrupt and go to zero? Probably not. It's really tricky because how do you convince people to essentially spend and invest and get things going again, especially when you see the population's like not going anywhere and in fact could be declining even further. People just aren't having kids. It's a problem, and like it's not an easy fix. Immigration also is very, very slow. It's hard to get in there if you want to work in Japan as a foreigner, stuff like that. So they probably need to open up their borders a little bit more in order to just stimulate some growth. There's all sorts of stuff with that, and I could probably make a whole bunch of videos on that stuff. But they're raising rates. The interesting thing about it as well is the yen was weakened. I was thinking the Bank of Japan raised rates, the yen would be a little bit stronger, but I guess not. Maybe people are worried about printing or something like that to stimulate. Who knows? The other thing too is tomorrow the Fed actually is going to announce they're not going to do anything. They're not going to raise or cut tomorrow, but they're going to announce that. And then also too, I think the big one is going to be we're going to see the dot plot, so you get to see sort of projections of what different Fed members are thinking about, where we're going from here. The best that things that I've read, my personal opinion is that don't do anything this year. That's just my opinion. Just stand pat or raise. You could do that. But the best estimates I've seen that we talk about on the channel with economists, maybe looking at a couple cuts, maybe in September, something like that. The market wants June. But at the moment, the market is betting on around a 50% chance of that happening. But I wouldn't count on anything anytime soon. That's just my opinion. But we'll see what the Fed Chair Jerome Powell says tomorrow. So anyway, be careful out there. I'd love to hear your thoughts on any one of these stories, and always appreciate your time. And I'll catch you next video.